All right, I think it is a good idea to go back and look at the housing bubble and draw some yellow lines so we can get a comparison here for kind of where we are, the timing of this bubble relative to where we are in our crash. And I think this bull market line up the housing bubble is pretty useful for us right now, because that's kind of where we are now. Is we're back testing our long-term bull line up our bubble. And then I was trying to draw some targets if we drop out of there, kind of what the timeline would be and where we would go. And we see in the housing crisis, we get another kind of reversal and backtest line here, and it really just happens in the middle of nowhere. So I mean, we have a long-term base line here for the dot-com and the housing bubble and Black Monday. Like this is the 1982 line down here. Or yeah, it comes right back down to it. Yeah, this is the 1982 like floor line that I have drawn in our bubble, and it's way lower than where we are now. But Black Monday came back down to this line, and then you got the dot-com and the housing bubble came back down to this line. So this is kind of a floor line on the whole everything bubble, and the the housing bubble and dot-com are part of the everything bubble. It's on the way up. But I just wanted to get in here and do the trend lines and kind of compare this one to our bubble. And it's on the same chart, so I can just go zoom over there and compare them in the middle of the video. This is Brian Lewis with MMT Investing, and things just changed. So this yellow line kind of through the middle of the crash really is not, it's really not a real line. There's no like bull market support of this line or anything like that. It just kind of cuts through and it just gets reaction on the backside of the bubble. I mean, it doesn't really go back to anything. I mean, you can draw it back. We don't have enough data on this S&P index chart. But I mean, if you draw it back here, it'll probably get a couple of reactions, but it's not a support line or anything like that. I mean, this is just kind of where we happen to get the intermediate reactions on the backside of the housing bubble. And I mean, I guess just do that with it. But let's get in here and look at what we got, because this is pretty close to what we're seeing right now. You get the blow off top and dead cat. You get kind of this intermediate bull trap or dead cat bounce above the main support line of this bubble, and this is the long-term bull line for the top of the bubble. And so we get the dead cat bull trap bounce above the line, break it, back test it, then we test it, break it, back test it again, and we break it and back test it here, and then we go down and we break it and back test it again. So this is a kind of high middle bounce scenario for a credit contraction cycle, and this goes from mid-October to mid-January. So yeah, that's 3 months, right? So this is a pretty clean, like 3-month kind of cycle, and you get that shape where it's a drawdown and a bounce and a bounce, and that's the kind of shape that we're looking for in a credit contraction cycle. You usually get a bounce, and this one has a long and slow drawdown and kind of a contracted and high middle bounce. And so it looks like on ours we have a quicker drawdown and a much longer drawn out middle bounce kind of thing coming, and we haven't gotten a middle bounce yet. So I wanted to do the case for a high middle bounce right here. And you could compare this to the Japan bubble, but the spot where you got that really high middle bounce in Japan was like 2 years into the backside of the bubble, and I think this is a much better look at the actual breaking of the support line and the backtesting of the support line of the actual blow off top, because you get the blow off top here and sort of the dead cat, but this is the real backtest where you terminate that tangent line. And once you terminate that tangent, and I was talking about this in a previous video, like this yellow line is not a random support line. This is a wave that's, I guess in this one it's like 5 years long, and it's mostly a bull support wave. This tangent is mostly you get bull side action on this wave, but it's this is a 4 year long wave along this tangent line, and when you hit it here, that's the end of that wave. This terminates the whole wave of the bubble, and once you terminate that wave, you don't come back. And terminating the wave usually is going to result in a rip like this, and then you go do other stuff. And wherever you land on this rip is really important for trying to predict what's going to happen next. So those are the kind of things that I'm looking at. And this is the potential shape for the end of this credit contraction cycle that we're in right now, is to terminate this tangent. And I'm looking at it and thinking we might be just like here doing a quick back test, and we might get a middle bounce up back to this line, and that would put our cycle at like a 4-month credit contraction cycle out into the middle of June if we do that. Or we might have just done the little dip and back test just now. We kind of went down. We did a decent sized back test, but it didn't come down here, like down near the lows or anything like that, or halfway near the lows. I mean, we just came down just a little bit under the line. So we haven't seen a move down like this. And so we might get this kind of high middle bounce. And then I want to zoom out on this and look at the whole backside of the bubble. So I painted the floor. The floor line in our model is the same floor line as this one. It's the exact same line, and it's at a different level when we're at the financial crisis. It's an increasing, support line or tangent line. And this 1982 line is an actual tangent line that supports the entire everything bubble. And we tested it here, and we did a V-bottom reversal out on top of this line here. In the financial crisis, we did a V-bottom reversal out to a higher trend line. And in Volmageddon, we also did a V-bottom reversal to a higher trend line off of this line. So these are the increasing tangent lines. And I wanted to look at this kind of nowhere man middle zone, because it's a super long way from where we are down to this line in our chart too. And it's not reasonable to be like, oh yeah, we're going to just, go down in this one credit contraction cycle and try to get down to the bottom of the everything bubble. Like, that's something that usually takes several years. And here's an example of that, where you get the dead cat and you do terminate the bull market line. You terminate your bubble top wave basically, and you get down, and then you have this whole middle area of the backside of the bubble where you're reacting along some imaginary line in the middle of nowhere, and you back test it, and then you kind of get down to the consolidation area at the end of the bubble, and that's where you start testing out this bottom line. And in this case, in the housing bubble, we stayed above it, and it's really, I drew that too low. It's right here where this line is. Yeah, our 1982 line runs right through here. And we're testing it and breaking it, and we break it. Finally, after the consolidation, we consolidate on the line, break it, and then we get a new higher tangent out of here. So that's kind of how the housing bubble looks and how we floored on our line, and we did a V-bottom reversal out of the whole bubble. We didn't do a V-bottom reversal out of the initial credit contraction cycle. Like, this just set up the bear market on the backside of the bubble. And this is this is a good model for where I think that we are right now in in our bubble, as we are on this credit contraction cycle on the top of the bubble, and then we're going to want to find out. So it looks like where we bottom on this credit contraction cycle is going to tell us a whole lot about the shape of the bubble, because this is kind of the line where you get the reactions and the back tests on the middle of the bubble, which could be a few years. And that's what we see in the Great Depression and Japan, like huge sovereign debt bubbles. It still is, it's about, 2 or 3 years to unwind the whole bubble. And it's usually one cycle to blow the top off. And we haven't blown it off yet. Like, we're just underneath this yellow support line, backtesting it now. And let me go. Yeah, we can just scroll it. So this is Brian Lewis with MMT Investing, and things just changed. So here we can take a look at, here's some interesting ones. This function is pretty similar to the .com and the financial crisis, because we get this early kind of high volatility bubble, and then we get a real crash here, and then we reverse out into a higher line that hits our dead cat bounce. So we can take a look at this one pretty quick. And here we get similar kind of thing. This is Volmageddon. Here we get super deep gash and a really high bounce and a high middle bounce, and then we get another gash. And here's one where we get a pretty deep gash and a lower second bounce, and then a lower second bounce and a much deeper gash here. And this is where we get our V-bottom reversal that everybody likes to talk about, right out of here. And this comes at the end of a 3-month credit contraction cycle. These are all, roughly 3-month cycles. They can be 2 to 4 months. They're usually in that range. And you get this drawdown and a bounce kind of behavior that I've been talking about in the credit cycle. And it's not always shaped like this. Like, there are examples of a credit contraction cycle where you get a big bear trap shape and you get kind of a high middle bounce, and then the last bounce is like up high. And so it can vary from kind of bouncing up to this one where you bounce like aggressively down. That's the height of the bounces is difficult, and it's kind of variable on how close the middle bounce happens. Like, this is a wider middle bounce, but that's the general shape that you look for in a credit contraction cycle. And this is the special case that we got. We got this in the Great Depression. We got this in the financial crisis. We got this at this bottom. I call this the Volmageddon bottom. Volmageddon was back here, but there's not a good name for this bottom. So I call this whole mess of high volatility stuff the Volmageddon top and the Volmageddon bottom here on the second crash. And you can see here it's labeled the Volmageddon line, which goes down to the consolidation on this one. And this V bottom is not all that common. And when you get this V bottom reversal, it means that you have switched out onto a higher trend line and a higher kind of bubble line. And so let's go in here and look at this thing, because we get kind of this Volmageddon line on the top of this dead cat bounce above our trend line. But this 2008 financial crisis trend line is our big bubble line up from the financial crisis that we're trying to kind of blow off right now. And see, I mean, we've crossed it and kind of back tested it now, but we haven't gotten a move down. And right now, I think it's quite possible to do some kind of a high V bottom. I wanted to paint this kind of high middle bounce case and try to figure out the timing on this. Yeah, because June, I was initially, based on the timing of this first pull down, I was looking for kind of June as an end date for the whole cycle. But now that we've got this extended shape and we're getting more financial data on the down cycle, it looks like it's going to be a little bit longer than 3 months. And I mean, we did get max divergence on our MACD over here. The MACD is really, really useful for looking at these middle bounces. So, I mean, we got a max divergence back here, and we have been going uphill to a lowering MACD kind of, and that is not a good case for like if you get that deep kind of middle bounce like this, the MACD, you'll get this downward movement on a decreasing MACD, and this will be a reversal point. But now we're getting kind of up movement while the MACD is going down. So we'll try to figure out what the shape of this thing is going to look like here. And we could either get, we could either get a down shape at the end of the cycle from here, if this is terminating the tangent line, or we could get kind of a high middle bounce where we go red on the MACD and then come back to green and then kind of get a down move. But I would still expect, you get the down and you get some bouncy stuff and then you get another down. Usually, although that's not always the case, if you're in the middle of a bull market and you get a credit contraction cycle, you can get kind of a high middle bounce, and then you can get that bear trap shape where you bounce high and you get a high last bounce. That does happen, but we don't have any support lines to suggest that would happen. And this also is a massive, massive reversal and a huge trend here. And we've already backtested one line and broken it. And that doesn't look like the bear trap case for sure. So I just wanted to draw kind of the high middle bounce case on this one. And that's based mostly on this MACD going down while we have gone up. We got higher highs, basically. Usually you don't get a higher high on the MACD. Like the MACD comes down and you get a higher high. This is not common. Usually once you get max divergence, that is actually a top on the real chart and you don't get a higher high. So this move here surprised me. And now we're consolidating around this line and just trying to take a look at some shapes that we might be expecting here. And we are decreasing here, and we'll see if this MACD turns over. This is a super, super aggressive green side of the MACD, and it's not doing the shape that I expected it to do. I mean, I thought that we were going to turn over in this area here, and we ended up getting this kind of 5-wave pump, and now we're getting this consolidation backtest here. And right, so now we'll find out what we get. I mean, are we gonna, I guess the bull case is the bulls would like to stay on this line, or they would like to bounce up to this line and then stay above it. This line is super, super important for the bulls. If we terminate this line and go down, it's very, very bearish. And so the bulls like this consolidation and they don't want to rip down. But if we do come down, we can get back to it. And in that case, you could terminate the line later or stay above it. But let me switch over. Let me switch over to the hourly candles. All right, so here's the great financial crisis line, and the activity that we're getting right now is it's more bullish activity, and I'm trying to figure out where the reaction of this line is. Are we backtesting the thing here, or are we consolidating on this line? And I'm not sure exactly where to place this bull market line, because this is a 12-year long, wave line, and the tiniest little degree shift in this thing is a huge change. This is like less than a 1% degree swing on the line as a huge shift here. So I don't know exactly where to place the line, but there's a couple places that make sense based on different reactions that we have gotten. And I like this area here that gets a ton of reactions. And it looks like we're breaking it again. If it's placed there, and if this is kind of a back test thing, it might make sense to place it on top of this area. Those are the two places that make the most sense and have the best reactions to the line. And I'm just trying to figure out what we're doing here. And then I'm trying to place an outer tangent line here, which is looking like somewhere in here. Looks pretty good. Guess for the outer tangent. Or I mean, if the back test is up here, maybe the outer tangent's out here somewhere. I don't know. This line's not placed yet. I'm trying to figure out what reactions we're getting here, and looking at the MACD and seeing if it's going to turn over into red territory. Really just don't have a good picture of what's happening right now. And just waiting for a big move. We've kind of had this consolidation stuff here, and there should be a big move happening at some point eventually. We'll see what happens. Please hit the like button to help me out with the YouTube algorithm. This is mostly just a look back at the housing bubble and kind of the shape of the bubble and how we have come down. We've already backtested and terminated our sort of dead cat line here, and now we get kind of this middle area that we don't know about. I'm drawing some vague lines. We don't have a tangent line or anything in this area to work with. But you saw that the middle of the financial crisis bubble, we didn't have a tangent line, and we still got some pretty reliable tests and back tests and things along a random line that just was where it happened. And yeah, this is we're still doing back tests here and we're still decreasing on the MACD. So this does look like a turnover area. I don't know. We'll see what happens. Haven't gotten anything specific today, but if we do terminate this tangent here, or we get a high middle bounce and terminate it here, I mean, that's still June. So, I mean, this whole thing could happen before June. We could get a high middle bounce, and that's plenty of time for this thing to come down into June and kind of find that middle area of a bubble. But I don't know, not really. Like we can't go down on this angle. That's too crazy. The angle has to be like these kind of angles, and that would put us out way past June. And I mean, I guess the time length of the cycle it's not fixed, but the financial data that we have is suggesting June as the end of this cycle. So still working on this model, and this higher high here after the MACD turnover is surprising, and it was not the shape of the bounces that I was expecting. So yeah, so just trying to track it and figure it out, see if we'll terminate this thing, see if we get a move down. And it's just dragging out. What's today? Thursday. Yeah, it's just like week 3, several weeks. It just keeps consolidating around this line, and the volatility is increasing again. So it should get a big move. It should get a move soon. It's just not happening yet. So I don't know what to predict at this point, other than just another move, and it should be a move down. And that's what I've been saying, and we haven't gotten it yet. So that's kind of the outlook now, and a high middle bounce scenario. And please hit the like button. And it's not investment advice. Happy trading.